Well, good morning, everyone, and welcome to another FS Club event. Today, I have as our guest Claire Smith from Beyond Investing. Hi, Claire. And Claire is going to be talking to us about her work at Beyond Investing at the frontier of positive change. This should be a subject of great interest to us in many ways. It's not just the social and ethical issues that are behind it, but also, of course, the general trends in demography that also affect it. So whether you're coming here from an ESG angle or you're coming here from a hard-nosed finance angle, what Claire has to say today should be interesting. I am Michael Mainelli. I'm your chairman, as I think many of you will know, and it is truly a delight to be able to chair the FS Club because our sponsors, and I mean this heartily, our sponsors are very, very accommodating and helpful and allow us to range widely and freely over any subject that touches on technology, economics, or finance. Now, today's agenda is fairly straightforward, as ever. My job is to get out of your way and let you listen to Claire. Claire's going to talk for 20 to 25 minutes about her work at Beyond Investing, and we have lots of time for questions and comments. We'll also have one poll during this talk to keep everybody interested and see what the rest of the audience thinks about issues. So, Claire, if I might, just like to hand over to you.
Thank you very much, Michael. It's great to be here. So yes, I'm Claire Smith, the founder of Beyond Investing, and I think on the next slide, there is a little bit more on my bio, if we move that forward. And again, also my bio is basically a long history in the financial market since 1985, and then parallel to that, my own personal convictions to be vegetarian and then vegan. Over time, I became vegan, and also to be involved with various environmental charities caused me in 2017 to let those worlds come together and start using investment for positive change and at the frontier of positive change, as Michael has mentioned. Moving on. This basically demonstrates the problem. There is a very large cow on or bull on that slide, and that represents the 60% of livestock, which is the weight of all of the animals that humans have domesticated and which are living on Earth at the moment, as compared with 36% of humans, so not quite 2 times the amount, but close to that, versus the 4% of wild animals. And the whole point of my efforts in terms of this investing is to address that heavy load on the world, the resource inefficiency that is involved in that, and the negative externalities that are caused by this excessive use of animals. Moving on. So I'll just pop up the UN Sustainable Development Goals, which I'm sure everybody knows very well, highlighting them in this form because the 4 on the bottom are really those goals of the biosphere which are necessary for our survival on Earth. And without that, you can't have society functioning properly and you can't have the economy functioning properly. And I'm going to highlight that animal exploitation does affect quite a number of those goals, but in particularly those 4 at the bottom. Going on. So highlighting the biosphere, and you have life below water, climate action, clean water and sanitation, and life on land. And essentially, there's quite a number of statistics on here which are demonstrating the way that the use of animals, catching animals or farming animals, is affecting the biosphere with the excessive fishing, overfishing, and also the amount of bycatch. The extent of greenhouse gas emissions, which can be attributable to animal agriculture if you look throughout the entire supply chain, including deforestation. The use of fresh water, 1/3 of all freshwater consumption. The amount of waste that comes from animals. A normal-sized dairy farm can actually produce as much waste as a town of 400,000 people. The amount of deforestation, about half of the world's forests, primarily for cattle grazing and growing animal feeds, have been cut down. And also a lot of the ice-free land, about 83% of all farmland, is attributed towards livestock and feed. Talking about society, the key ones here are no poverty, 0 hunger, good health and well-being, and gender equality. And it may not be realized, but factory farming does have a terrible effect on rural communities. It basically makes it impossible for small farmers to survive. And there's a lot of land grabs that go on within those farming communities, but also obviously in places like the rainforest, which are obviously being cut down, as we mentioned. And the zero hunger is relevant to the fact that animals consume many times more food than humans are actually consuming. And so much of that food being taken by animals means that people are going hungry. Health-wise, well, there's a lot to say here, obviously. Animal products are linked to the top 15 causes of premature death and chronic illness. But in addition to that, we risk basically antibiotics failing to work in a very few years' time because of the amount of antibiotics being given to animals over their lives, which encourages bacteria to morph into bacteria that are resistant to those antibiotics. And we're all sitting here. No conferences taking place because of COVID-19, which at its root does come from animal exploitation. It has obviously skipped across those species barriers because of the way that animals are being brought into the human environment and put into confined conditions and unsanitary conditions. Animal testing is pretty useless in terms of obtaining drugs that work. And on the gender equality side, I found some really horrible statistics about sexual harassment within slaughterhouses and the meat processing industry, and also the effect that it has on the surrounding area in terms of an increase in domestic abuse. Obviously, if we have a poorly functioning society, we have a poorly functioning economy, decent work and economic growth. Clearly here, in addition to the items that are mentioned, we have the COVID risk from slaughterhouses and meat processing plants, which we have seen in terms of the hotspots around those facilities. And it was also known that forced labour, a lot of immigrant labour is going on in those facilities, not all documented, human trafficking with a lot of abuse and poor working practices. Even those farmers who are on the land are highly indebted often. And in terms of responsible consumption and production, the household waste in Western countries, a lot of it is meat, dairy and fish. That may look like the minority, but I think what you have to take into account is how much those animals have eaten before they arrive in your fridge. And so if it's 30 to 40% meat, dairy and fish, you can multiply that by 10 to 28 times when you think about the amount of food that those animals have wasted. So this is the problem, is so much of our resources are going towards animals when they could be being used directly by humans. So I looked at the three levers of society. So we have the consumer, who can obviously buy the products that they want to buy and obviously attempt to shop sustainably and be aware of how their consumption impacts the world. Citizens who can vote or campaign, sign petitions, etc. But something that seemed to be less of a lever that was being operated when I looked at this space was capital. So how you actually invest your money does matter. And this is what I wanted to address in the investment platform that I created. Just going back to the consumer, you can see that veganism, or the plant-based, as the US like to call it, is an increasing trend. So from about 10 on the left-hand side to 100 on the right-hand side over the course of 10 years, a 10x interest in that. And I'd like to just do the poll quickly now, if we can.
That's fantastic, Claire. Here it comes. I'm just launching the poll. Give people about 30 or 40 seconds to answer. Claire is classified. Go ahead, you read it out.
Yeah, so vegan is obviously no animal products of any type at all being eaten, and ideally none being used in your daily life either in terms of other forms of consumption. Vegetarian means no flesh, but you are still eating dairy and eggs and maybe honey. Pescatarian means everything but meat. And within pescatarian, we might actually also think about flexitarian, which is people who are avoiding meat, most of the time, and only very occasionally eating meat or fish. No red meat, so a lot of people avoid red meat and but only eat chicken. or fish, and the omnivore so will basically eat everything. If you can click on those, it'd be very interesting to see the profile of the audience.
Yes, it is indeed, Claire. It's not at all what I'm expecting. I'm just giving another couple seconds for the votes to come in. Almost everyone has voted. Great. I'm now closing it, and I'll share the results with everyone. What I found interesting, Claire, is no vegetarians, so a very strong vegan component, clearly a very strong omnivore component, and no
Yes,
vegetarians at all. So
that's super interesting. What it shows to me is that if a lot of people, 5 or 10 years ago were vegetarian, it tells me that a lot of vegetarians have decided to go vegan. Because I was expecting maybe 10 and 10, but instead it's 19% vegan and 0 vegetarian. So I think the vegetarians have shifted towards veganism in the last few years.
Yeah, that's an interesting observation, and I think it accords certainly with the social life in London that I've been seeing. But anyway, Claire, back to you about this global megatrend.
Sure. So yes, I put on this next slide a few of these trends with the increase in. We're not quite yet back on the slides, Michael.
Are we not? My apologies.
Got stuck on the poll.
My apologies. Let me just try and close that down a bit. Seems to have. Okay. It does seem to have been stuck on the pole. I'm unable to move it. Just give me a moment. Okay. There we go. My apologies.
Perfect. Okay, thanks. Let's carry on then. So yes, as the point at the top says, the real growth in the vegan industry has only just begun, with us starting to get to some real tipping points. And I'm really amazed actually at that 19% vegan number, which is a lot more than the general population. So in the US, arguably 19 million vegans. I've also seen some numbers around about the 10 million in terms of what people's, in terms of recent numbers. So it's still some, 5 to 10% of the general population. But the key thing, and I'm sure that a number of you have kids, is that people between the ages of 18 and 34 are 3 times more likely to be vegan than those over 55. And that is also then permeating through to the older generation as the kids obviously try and persuade their parents. The flexitarian trend is another large one, and with the pescatarians, that was a good number in that poll. Some 44% of consumers now following a low meat diet. And the other thing, obviously, is as people are becoming vegan or starting to cut down, obviously, there's accelerating demand for plant-based protein, with numbers, according to UBS, of about 85 billion in 2030. Or if you ask Barclays, they have a number of 150 billion in terms of the size of that market, which is interesting when you consider that the global market for meat is 1.4 trillion, so around 10x that. And if you add the other types of animal products, you get to around almost 2 trillion. So going on to the capital side, which is what obviously I focus on, we have seen this dramatic increase in sustainable investing. But it's fair to say that it's been only in certain areas, a big focus on governance. A lot has been attributed to divesting from fossil fuels, 11 trillion. But given that ESG is increasingly focused on climate impacts, the next place to look at is animal agriculture. Going back to the statistic that I mentioned earlier of 37%, the next stage of divestment almost has to be animal agriculture if you're concerned about the climate. And obviously a lot of people are also concerned about things like factory farming as well. So there's another ethical standpoint there. And furthermore, ESG is also increasingly focused on reshaping and reinventing, I should say, business models. And I think there's a shift away from you're doing something bad, but can you do it slightly better or less badly, to does your business model make sense, and does it really deserve to continue in business? My favorite one here is the carbon neutral arms manufacturer. which I saw once, which is one of those types of doing something bad, but trying to sort of show your green credentials.
Gunpowder doesn't count then.
Sorry?
As I say, gunpowder doesn't count.
So anyway, so the capital markets obviously are not just VC. There's a lot of focus on VC and some very high profile investments being made, the IPO of Beyond Meat, etc., which was funded by some 250 million of VC before it did the IPO for about another 250 million. It is spread across all types of capital. And if you're an investor, obviously you need to have solutions across the whole risk-reward space, across blue chip, large cap companies to satellite, small to mid cap portfolios, which are maybe based around themes, particular opportunities, growth opportunities, capital, which, more is morphing into as well having some kind of impact to it. And then for your bond, for your cash or for your fixed income, some element probably of negative screening and microcredit in order to get a sort of impact boost in that area. So I thought about this from the vegan perspective and created some products and also some strategies around it. So the key thing here with this core allocation in the large cap stocks is avoiding investment risk. So within the liquid large cap space, you can only really do negative screening. Why? Because whether I might like it or not, there is not going to be $100 billion market cap plant-based companies suddenly appearing that, can sort of vault into the S&P 500 that I can buy. So all we can do is to remove all of the kind of nasties, as I call them. And so we've created a policy and a framework around how we remove companies that are damaging animals and the environment. So that's all types of animal exploitation, animal ag, animal testing, genetic modification, animals in sports and entertainment. And then in addition to that, some of the environmental damage as well, which harms wild animals. So everything around fossil fuels and other types of environmentally destructive activities. So the US Vegan Climate Index is the US version of Vegan Climate Index. Obviously, it can be structured for multiple geographies. We're well on our way to creating a global product. It can replace benchmark indexes. And we've been running this since June 2018 live. It's achieved over a 2 times information ratio with a tracking error of 1.41, excess return of 3.4% per annum. So we're really quite pleased with how that's done. Clearly, with all of the exclusions we're making, next slide, please, Michael, some 49% of the first fall out because of all of these different exclusions, because we are being really quite picky. Even if a company has a very small amount in a certain area, we are removing it. It doesn't necessarily have to be the majority of their business. And the sector comparison means that we are in communications, technology, more in financials, avoiding a lot of healthcare because of pharmaceuticals and the animal testing. Utilities is down, industrials are down. The consumer sector, particularly the staples, because of the heavy focus on meat, almost pretty much disappears. And consumer discretionary is reduced, obviously, as well, because of the use of animal products in clothing. Going on, as you can see, I just put up the performance since launch. So initially a little bit of underperformance because the tech stocks were under pressure in late 2018, but then slowly increasing, getting good outperformance in 2019 through mostly weaker animal product companies, let's say, and animal testing and oil. And obviously through the COVID crisis, oils, the meat companies, airlines, cruise lines, hotels have all underperformed because they've seen such a hit to their businesses, which has led to some quite good performance against the index during that period. This is some impact metrics that we produce, and vegan, so vegan is just a shorthand for the US Vegan Climate Index, is on the far left of this. And we're running the portfolio through a tool called Impact Cubed, which has been developed by my business partner, but it is an independent business. We compare the stats of vegan against the S&P 500, so 37.43 in terms of greenhouse gas emissions against 165 almost, which is really interesting because it actually maps to that fairly well to that proportion of greenhouse gas emissions where they come from. Waste, only 5 tons of waste generated per 1 million in revenue against almost 130 of the S&P, and water, 0.33 thousand cubic meters of fresh water use against 5.11 for the constituents of the S&P 500. And just for comparison and for fun, we obviously look at everybody else's index as well. So there's a number of products, 6 different products, which are ESG indexes that we've inspected. And in each of those cases, we're actually lower on carbon, on waste, and on water than all of those by our more aggressive screening. So a more complete solution from the environment and biodiversity as well as for the domesticated animals. So if you want to have a high-powered portfolio, you probably need to be looking at growth opportunities. And here we have the Vegan World Strategy, which is identifying listed small to mid-cap stocks with upside exposure to plant-based themes, because obviously our large cap is stocks above 5 to 10 billion, and this is this area below. Which are purely plant-based companies that are poised to deliver good performance through the plant-based theme. I see on time we need to be moving along, so I'll just go on to the portfolio characteristics, where we've screened out the vast majority of stocks within the consumer space and the material space in order to really zero in on about 100 or so stocks that are vegan relevant and also do pass this vegan screen. And our portfolio was around 50 stocks throughout the back test. Those 50 stocks had on average a 24% revenue growth. So an interesting play. In terms of the themes within that portfolio, if we go on to the next one, you'll see that some was a pure plant-based protein, some were ingredients manufacturers, some were soft drinks, healthy soft drinks, not sodas. Others were vegan convenience food, some textiles and apparel, obviously playing to the vegan clothing end of things, cruelty-free personal products, and obviously fresh produce, because, you know, that's what vegans also should be eating, plenty of fresh produce, not just processed food. And the country exposure is North America, a bit in South America, quite a bit in Asia, and actually quite a little amount in Europe, interestingly. So if you want to really, you know, a high octane up your portfolio, you have to then be looking at the startup. So if we move on to that, the venture impacting space, where I have been running a portfolio since 2017, is finding solutions to these problems. So essentially replacements to animal products, taking away from animal agriculture towards plant-based proteins, cell ag, synthetic biology. In terms of convenience food, away from junk food towards healthy vegan food, and maybe also organic as well, away from animal testing towards cruelty-free alternatives or alternatives to animal testing, because we do obviously still need to test drugs somehow. And I have some investments in organ-on-chips companies, and in processing animal products, which is mostly where clothing comes, you know, is particularly damaging to the environment, vegan lifestyle products. So Beyond Impact, which is part of this Beyond Investing platform, is described on the next, with the investment philosophy being oriented very heavily towards companies whose products are superior, scalable, and sustainable. Because if they're not superior, nobody's going to buy them. The vegans are sick of having to have inferior products for so long. If they're not scalable, we're not going to get the growth from the company, but also we're not going to get the impact in terms of animals being replaced. We're not going to get that transition. And also sustainable, because we don't want to swap one problem for another. So the listing shows the different types of companies that I've been investing in. And I'm showing you my portfolio on the next page. So this impact venture capital portfolio has been in existence since 2017. And on the top left, you see some cell ag companies. So these are companies that are creating actual muscle tissue and fat tissue, which is animal-based, but they're growing it in the lab. Mosa Meat, Super Meat, Blue Nalu, Shiok Meats, Gourmet. Then if you go slightly round to the left, we're going anti-clockwise. Algama Renewal Meal, back of the Yards Algae Science, Jack and Bry, Mighty P, Clara Foods, Meatless Farm. Go and look at their websites. They're all making some great vegan food, which is oriented more towards the protein side of things, plant-based protein. or algae-based, as you see. The vegan convenience food, Perfect World Ice Cream, the Burger Company, which is a small restaurant chain, Les Nouveaux Affineurs, which is a French cheese, and Ocean Hugger, which has some vegetable-based fish alternatives. Then in the vegan lifestyle, we have Swiss Decode, which is able to define, to see whether sorry, that's an alarm, to find out whether a product actually has animal DNA in it or not. Live Kindly, which is content media, and Mink, which is vegan shoes. And then Geltor and Emulate. Geltor is making personal products which are avoiding the use of animals with a synthetic collagen, and Emulate is the organ on chips that I mentioned earlier. Going forward again, we're just going to cover quickly another area which I'm developing, which is actually delivering this fixed income microcredit exposure. Because obviously you don't have huge vegan companies at the moment, so to think of them issuing bonds, that's not really happening. But certainly within the microcredit space, there's a lot to do because a lot of these companies need to be able to borrow and finance their supply chain. So many of them are young companies with very fast growth, but very short trading history. And so banks are not lending them money. Factoring obviously is very expensive, but factoring only works from the invoice side. How do they actually finance their purchase orders? So we're developing a platform which will provide sustainable fintech to these companies through crowd lending and supply chain solutions, which we may be doing on the platform solely or operating in partnership with other people who are prepared to lend against these purchase orders and fund the working capital of these companies, because otherwise they're just giving away, every time they do a round, a lot of that round is going to purchase the ingredients for them to make their products, whereas and that's causing them to give away quite a lot of their equity. So moving on, we have this as an app-based platform, and you can see what the app looks like on the next slide. Yeah, so this mobile app and website was in a beta since April 2019, but the new version has been live since January 2020. We're already getting quite a good amount of traction, and through some just simply organic marketing, we have a lot of interesting companies who would like to fundraise through our platform. We're still building it out. We're not live quite yet, but it will be a way for people to invest directly into the vegan business area without necessarily going through a fund. If you're the kind of investor that can actually invest in a fund as well, which is obviously another restriction. So just to summarize what that fintech platform is going to be doing and where we are on that, the aim of it really is to democratize the funding into vegan investment opportunities by applying these fintech and digital innovations, initially starting with European deals, European investors across all types of investments, particularly focusing on that supply chain financing, as I mentioned, with different types of investors going into retail where we have crowd lending or crowdfunding approvals already, and where we are applying for them. And that deal flow will be vegan vetted, so it won't be any company that's using animals. We'll be providing low-cost fund transfer as well for companies as well, because a lot of the transactions are cross-border. I think that actually finishes my presentation remarkably just before the 12:30 cutoff. I'd be very happy to take your questions.
Wow, Claire, that was a magnificent tour through a very complex area, very thorough. And very, very informative. Yes, we've got quite a few questions. Folks, just at the time available, use the GoToWebinar facility to send me through any questions you'd like. But I'd like to get cracking with one here. Antonio Malhero Romeo asks, the plant-based business scene is at an initial stage and mainly in startup mode. Hence, it's having the pains and shortcomings of typical early stagers. To have the fast impact the world needs, what needs to be done to reduce the high failure rate of the startups?
Yes. Yeah, I think what's super important is that companies that are already in existence are not starved of capital and can scale up in keeping with the demand for their products. But in addition to that, we do need a lot more startups to be funded as well in all types of business areas. And not everybody is going to be a unicorn. There are going to be zebra type companies. So I don't know, a local vegan coffee shop or bakery or it's not every company that's going to be appealing to the VC. And so this area of alternative forms of funding, debt as well, supply chain financing, royalty-based funding, I think there's a lot to be done there in order to really fill out the plant-based business scene, so that it's not just a few high-profile unicorn-type companies that just hit the stock exchange. We need a lot of SMEs as well in this area, and maybe they will stay SMEs, but they do need support as well.
Noga Golden asks, what new trends are you seeing in alternative protein or alt protein ingredients?
Oh, yes. Actually, I did a presentation last week with a group of people who are working in algae. I see algae as a very clear trend in terms of a new ingredient. I'm seeing a lot of effort among companies to take algae, micro and macro algae, and transform it, because pure algae is not so appealing, frankly, but it is enormously nutritious and can be very powerful in terms of carbon sequestration. So it solves so many issues, but it needs to be transformed into a format or introduced into foods as a booster for protein, for healthy fats, for antioxidants. And I think that's a clear trend.
Actually, related to this, Jane in West London wants to know, what are your thoughts on the use of insects as alternative protein? Does that fit your model?
I see it as a pure distraction, and I see. I've been watching the insect space for a few years. Obviously, it's clearly not of interest to me whatsoever. I don't see any point to start exploiting another form of animals, when we can move away from it completely. And I think within the insect space, I think there was an effort to try and encourage consumers to directly eat it, and now it's moved very much more towards the area of animal feed and sort of low-cost, high-protein animal feed. But given that, if you look at the Rethink X report, which basically put down on paper a lot of my thoughts that I've been developing, since 2016, 2017, they expect meat to be sort of a business that has just gone out of business by 2035. So developing new types of animal feed for animals which won't exist in the future seems a bit pointless.
Hugh Purser is interested in knowing, could you give some kind of indication of the liquidity in this investment sector? How liquid do you find it?
Well, as I moved through the presentation, obviously the liquidity went down and down and down and down. The first thing is enormously liquid because it's a replacement of the S&P. It's an index which is made of the biggest stocks in the world. Then if you go into the small to mid cap portfolio, which is all listed equities, some of those have high volumes. I think that I put up the average ADV, which is around about 10 million a day ADV, but there are some stocks which are under 1 million a day. At the lower end of the portfolio. When you go into the venture space, then you're waiting for an exit, clearly. So there you've got maybe 3 years, 5 years, 7 years. And I basically put that portfolio together with a view to exiting by the end of 2027. So I'm not investing anymore in anything which has a very long time to exit. I'm only investing now in things which may be coming out within the next three to 5 years, like brands, for example.
Interesting. So the sector is moving. In other words, that's important. Yes.
Yes.
Hugh also goes on and wants to know
the equity side. Obviously.
He was also interested in just understanding the average holding period of your own vegan investment portfolio.
Michael, I can't hear your last question.
Sorry. Claire, he was
Would you mind repeating the question?
He was also interested in understanding the average holding period, but I think you've answered that. Yes.
Yes, one company that was in my portfolio has been bought out. But otherwise, I expect to see, monetization over the next 3 to 7 years.
Hamlin Lovell has a question for you. What if rainforests are chopped down to grow soybeans? Would you avoid companies using those supply chains or still view them as better than meat?
Oh, yeah. I mean, soy, well, 80% of soy is going to animals. So if we just got rid of that, then the amount of soy being produced would be cut by a fifth, down to a fifth, by 80%. And then it wouldn't be such a burden on the planet. I mean, I'm not anti-soy, but I know that a lot of consumers are not so keen on it because of that, that association with deforestation. But as I said, 4/5 of that deforestation to grow soy is because of animal feed. But I am favouring other forms of protein as well. I've invested in pea, in nut protein, in algae, as I mentioned. So I'm very keen that there's a diversification of sources. The algae I mentioned, and also the cell ag, because some people will be very resistant to giving up meat entirely, and so I think that has a place in this spectrum.
Now, Kirshan Ahmed is asking a question which I think is a little bit tongue in cheek, but true. How much energy is used by a webcam presentation? A typical Google query consumes as much energy as there is in a glass of orange juice. So, any thoughts on, I think it's an interesting point
Well,
here.
if you like, I mean, well, I don't know. I'm not sure, but clearly you're on this webcam presentation. So if you feel that I should be guilty, then you're just as guilty.
Indeed. And it comes a point when you're going to wind up locking yourself in a room and, bread and water you'd be lucky.
Exactly.
Anyway. I'm sort of curious about a couple of things. One, I was very struck by the spread of opportunities. When we first started talking, I kind of put you in a vegan box, and then it is. I think the viewers have seen through this. Wow, it's not just vegan. There's all sorts of the animal cruelty stuff, the chips, etc. A lot of this is really, though, to some degree, because I might argue that we have too many people on the planet. Are there wider things that you might get into that would look at overpopulation?
Well, I mean, I always find it a bit weird when people start saying, "Oh, there's too many people," because I'm like, well, what is your solution to that? Even if you stopped people, reproducing now at the rate that they are, or reduced it somewhat, it would still be too many people on the planet for the next 20, 30, 40 years. So, unless you're really into depopulating in some other way, I'm not sure how sensible it is to go down that path in terms of our immediate issues. The immediate issues are consumption. It's the crossover of both a lot of people and how those people are consuming. And so the responsible consumption and production, the SDG 12, is a really important one. And everybody can do something to address their consumption and to understand how their choices are placing a load on the planet. So I think that's the only actionable thing to do at the moment, unless you want to drop a bomb on a country or something to depopulate it in that way, which I'm certainly not proposing, and I don't think anybody else should be proposing either.
Exactly. Ian out in West Halifax is sort of curious that in a lot of the work that you're doing, you showed the really superb performance against other ESG indices that you had, particularly on waste and water consumption. Any ideas why that's the case, that these other ESG indices don't seem to be tackling that? Or are they just too carbon focused?
Well, I think they're carbon focused in a very narrow way. So we are not purely screening for carbon, but it just happens that a lot of what we're screening for from the ethical standpoint and the business activity. So we have basically a list of sort of prohibited business activities, and a lot of those are associated with high carbon. And then we have a further environmental screen where we look and we cut out again what is the highest of the carbon in that. We're also cutting out a lot of banks which are funding fossil fuels, so there's a kind of indirect high carbon element to it. And so I think we're just being a lot more aggressive, and we're ahead of the curve in some ways in terms of the exclusions that we're making. I think that in the divestment area, a lot of people have focused on fossil fuels, pure exploration and production, haven't looked down the supply chain into where the fossil fuels are being used, haven't looked at how that's being financed either. And so I think we're just a bit ahead of the curve in terms of the divestment, in terms of getting that carbon all the way down. The waste in the water definitely primarily comes from the animal agriculture and also the consumer industries, with especially fashion being very, very bad in both the waste and the water consumption, as well as animal ag.
Folks, I detect a lot of good technical questions, but I think you'll have seen just from the entire manner of Claire's presentation, she is extremely well prepared and does her research. And so these citations and credits will be available on the slide deck that has already been posted both on the website and here in the presentation. So we can follow up some of that as things go through there. I've got time really for just one last question, if I might, Claire. And that's a kind of a straightforward one. It's from Alexander out in Dorset. And he's curious. He says, you've got this heavy technology weighting in your portfolio. How much, I guess the thing that he's seeing that I hadn't grasped emotionally is that this really is a technology game in many ways. So do you see yourself as much a technology fund as anything else?
Well, it's not that we're sort of starting from a blank sheet of paper and saying, oh, let's put all this money into technology. We can only work with what we've got left after the exclusions. And we are certainly pushing down on the technology exposure to some extent because we're very conscious of not over concentrating in individual stocks. And we all know, the biggest stocks, the mega caps in the market, the FANG stocks, etc., which could get too high if you just if you just operated on a market cap basis. So we do some risk spreading in order to push down some of the highest weighted technology so that the portfolio is not over concentrated. But yes, it is really a function of what's left. We are looking at the mid caps and promoting some of the mid caps which do pass our screens in those areas where we are underweight in those sectors. But because they're mid-cap stocks, we don't want to overweight them. Otherwise, we're impeding the liquidity of the portfolio. So it's a delicate balancing act. What we hope, as I mentioned, is that more companies go vegan, and we are doing engagement on this, take animal products out of their supply chain. And sometimes it's really irrelevant to them. I mean, we have some engagement going on around companies like Apple and Verizon, where they have just a few leather-bound phone cases in their stores. We're not excluding them because it's a tiny, tiny, tiny amount of their business, but they could just get rid of it and it wouldn't make any difference to them at all in terms of their profitability. So we would like to see more companies take out the animal products from their supply chains, stop, testing on animals. If we could get the pharmaceuticals companies to stop doing that and using, say, the organ on chips that I'm invested in, which would be great, then we would be happy to have them in the portfolio. So we hope that we are moving towards this kind of cleaner, kinder, and healthier world, in which case there will be a larger spread of sectors within the index.
Well, I've got to squeeze this one in. Bob McDowell, who I think is isolating himself in the Channel Islands, has asked the inevitable. We over here in Britain, we've had, you're over there in Geneva, and you've heard enough of it. But over here, we have the B word, Brexit. He's asking the C word. What does COVID-19 mean for your portfolio?
Well, I mean, it's various. I guess in the large cap, as I said, a lot of the outperformance has come from some of the companies that we excluded. So we have essentially almost like a negative bet on them, who have been particularly hit. The oil price obviously was hit very, very hard. And then all of the stocks around meat production were hit very hard. And a lot of the stocks that are in the restaurant business, hotels, leisure, airlines, which is partly to do with their carbon and partly to do with their serving of meat on board. Those were exclusions, and they felt like a stone, clearly. Within the impact portfolio, I've definitely seen some very strong performance from companies in the portfolio that have already got their product into supermarkets, because everybody has shifted their consumption from supermarkets. With the ones that are more in food service, they've had a job to do to reorientate themselves towards the retail rather than the food service. So it's the ones that were in retail that are seeing the benefit of people switching towards their products, and also people using more retail rather than food service, and also online shopping if they're in Ocado or one of these online stores.
Claire, I wish we had more time, but we have hit the buffers, I'm afraid. It's always a sign when people are sending me notes through saying, great presentation. Claire, thank you for another informative webinar. But I actually would just like to read out one comment from Siu Fun Hui, who says, nothing we do on this planet is clean. Even technology consumes resources such as rare earth minerals. Sustainable consumption, which Claire is talking about, is surely what we should all be doing. So a real accolade here from our audience. If you could just hold on a minute, I've got to give a few thanks. As I opened, and mean most warmly to our sponsors for allowing us to range widely and freely over technology, economics, finance, and very often with a social purpose. And I think today's presentation highlighted that. I'd also like to thank you, the audience. Without you, there would be little point in having these. I noticed that we had a 98% retention rate today. Everybody stayed on, which is phenomenal. Tomorrow, we have another webinar on employee share plans and the government's share incentive plan here in the UK, but there will be wider issues. And on Friday, we have a fascinating event with Lord Grimstone, who's a Minister for Trade here in the United Kingdom, but also the indomitable Kate Adie, the war correspondent. So really looking at the geopolitical issues that Britain faces. So a lot coming forward in the next few days. But Claire, really, my third round of thanks has to be the most sincere and heartfelt one for you. Your preparation came through most amazingly. Huge amount of content and detail, but a very straight line of argument. I really appreciate it. You got through a lot of excellent material. We wish you all the best. Hope when your app is fully live, feel free to let me know, and I'll make sure that the viewers here get it whenever it comes out. Is it, what, a week or a month or something like that?
The app is live in terms of registering on the app, in terms of joining the community. So just go to beyondanimal.com and put up your profile and add your business as well. And in terms of the investment side being brought onto that platform, that's a few months away.
Good. Well, we'll make sure to get that listed on the website as well, just to belts and braces there. But again, thanks so much. Unfortunately, these days on webinars and in terms of saving energy, I won't open up and try and get everybody to clap, and I have to channel the audience for you. To do that today, I've got my Buddhist drum, and I will give you a round of applause and thanks. But seriously, Claire, it was a really wonderful.
Thank you.
And we hope to see you again and wish your fund every success, because we need it. Thank you.
Thank you so much.